Well, let's move on. Let's just take a look at the market as well, which is down 73. I mean, wow, that's a large cut now, which is materialized. We were down about, what, 30, 35 points, but we're at about 18,621. Next company on our radar is MTAR Tech. I mean, the stock has seen a near 12% rally in the last, 5-6 days. There's also been an approval of the PLI scheme for making drones with an outlay of 120 odd crores last week. To discuss this, we are now joined by Srinivas Reddy, Managing Director at the company. Mr. Reddy, great to have you with us here back on the channel. Appreciate your time. Good morning. Can we start with that PLI scheme, and could you walk us through what's the size of the opportunity for you?
We have not yet studied the whole thing as of now, how it's going to help MTR in this particular scheme. Probably over the next 1 week, we will look at it and see how it was going to benefit us in the long run.
But any kind of understanding on what are the incentives that you would get? What is the kind of opportunity that you would have because of this over the long run?
We should have a sizable opportunity, but again, we have applied for our defense license also, and we are expecting in the next 1 month or so, being a defense prime for Army and Navy. So once we have that, then we'll be able to highlight more on that issue.
In terms of your order book, can you tell us, I think the guidance that you had put out for FY23 end was 1,000 crores, but you've exceeded that in the first half itself. So what is the expectation for the second half? What's the order visibility like? And what do you plan to do by the end of the year?
We have already received the orders in the first half itself. We're expecting a lot more orders to come in, but I can't quantify the numbers right now. But we'll be above that 1,000 crore level by end of this year, because our second half execution is very, very strong compared to the first half.
Hi, Mr. Reddy. When we chatted earlier, you had guided for a 55 to 60% revenue growth for FY23, margins of close to around 30%, and your working capital days comes to around 200 days. Sticking by all the three?
Absolutely, yes. We are working towards that, and we'll 100% stick to our guidance.
Okay, and since your order book is looking so good and you're sounding so confident on that aspect, for FY24, what kind of a momentum are you looking at? Obviously, FY23 versus 22 is coming on a lower base. But FY24, what sort of a revenue growth guidance will you be looking at?
We're looking at a similar guidance. It's too premature, but as of now, we are looking at a similar guidance of about 50% revenue growth, even in FY24 as well.
And what is your peak revenue potential, sir? With the current gross block that you have put, the current money that you've put in current investments, your peak revenue is how much?
No, it doesn't really work out that way, because we are in multiple segments, but we do have enough capacities to handle different segments. But we can go to much higher revenue levels with what kind of assets we have right now, gross block we have. We can even handle the next year growth as well.
Okay, so you said 50% revenue growth is what you're looking at by the end of this year, right?
I said 55 to 60%.
55 to 60%. All right, got that. In the clean energy segment, which is your largest chunk, you have new products as well. There's the fuel cell segment too. Can you tell us what kind of volumes, what kind of visibility do you have here?
I've said that already. I mean, in fuel cells, we are also doing various products. We're adding a lot more products as such in our product basket, which would generate revenues of about 120 to 140 crores next year. We just got qualified for that. So we're adding all such products in various segments, which are all high margin kind of products, import substitutes and things like that. So this would really help the company to move forward in terms of improving our EBITDA margins further.
Okay, so when you say improve your EBITDA margins further for FY23, I think you had said earlier that you're looking to be at 30%. You think you could get better than that?
No, I would still stick to 30% at this point of time, because we are catching up on, we are at about 27 to 28% in the first 2 quarters. So second quarter being very strong, we should be able to manage that 30% EBITDA levels, what we have committed earlier.
Mr. Reddy, that sheet metal business is small, right, for you? It did only around 12 crores in the past quarter.
That's just the beginning. We have orders worth about 140 crores
Okay.
already received that because we have just started doing the first articles in
Yes.
engineering. That's what we do. So we have completed that. So now we will slowly see the ramp up moving forward.
Yes.
And here we are expecting more than 100 crores of revenues kicking in from sheet metal itself.
So from around 12 crores per quarter that we saw in the past quarter, by quarter 4, do you think we'll be at a run rate of around 25 crores per quarter?
Not really. We would still maintain that because there are a lot of first articles and batch productions going on in this quarter and the next quarter as well. But next year, we would look at more than 100 crores of revenues kicking in from sheet metal.
Okay.
Okay, all right. Thank you so much, Mr. Reddy, for stopping by, and appreciate all the numbers that you shared with us about the business and how things look.